MongoDB's shares are falling after the company's guidance for both the quarter and the fiscal year came in below analyst estimates, the forecast overshadowing a good report, earnings and revenue that beat expectations for the most recent quarter. Joining us now is MongoDB CEO. I'm stalling to make sure I nail your name, Dave. Dave Ittycheria, huh?
You got it, Joe. Nice to.
How are you?
Thanks for joining.
You're welcome. Thanks for joining us. Wow, $30 billion, basically a $30 billion market cap company. You need, first of all, for viewers that don't know exactly how you make all that money, what do you do?
So essentially, there's two ways we make money. One is we offer a cloud service where people can essentially provision, manage, and run their databases in the cloud managed by us. And people typically choose us to build applications that essentially run their business, whether it's working with customers, working in the back end, dealing with suppliers, and also just driving revenue growth. The second way is that people deploy us typically on-prem using a traditional subscription software mechanism where they buy our enterprise advanced software. And that typically is for customers who want to run workloads on premise. The advantage with MongoDB is you can run us anywhere, in the cloud, on premise, and even at the edge.
Would you say that investors should have looked at the forecast and been disappointed, Dave? Or in your view, you're just conservative whenever you don't know exactly how the future is going to play out?
Yeah, so essentially what we called out on the call yesterday, Joe, was that we had a couple one-time things. We had about 5% of headwind on growth due to two items. One was unused commitments. We moved our sales force to move away from customer commitments, so we really align our value to what customers want to use. But that created about a $40 million headwind in terms of growth this year. And then we had some higher than expected multi-year deals on our on-prem business. And because of the accounting rules, you recognize more revenue up front in these using ASC 606. So that creates a headwind again this year because we don't expect the size of those multi-year deals to happen again this year. Besides that, our consumption business, we think it's quite stable. It's just our non-Atlas business is slightly down, and that's where the guidance came from.
You've even cast a bit of a pall on some other cloud-related stocks, which makes me think it's not necessarily just MongoDB. What's the overall macro environment look like to you right now, Dave?
Yeah, we feel like we're going after a big market. We've grown very quickly. 10 years ago, we were a $30 million business. Now we're approaching a $2 billion revenue business. And it is a very big market. The big interest level is around AI. And when does AI show up in our numbers? And what I also explained yesterday was that, whenever there's a new trend, typically it's the bottom layer where you see the real investments happen. And you're seeing that in stocks like NVIDIA. You're seeing that with the consumption of technologies like OpenAI and some of the open source LLMs. But with all those investments, customers need to see returns on investments, and that will show up in the applications they're building, whether it's to drive more efficiencies in their business, whether it's to offer better experiences to their customers, or finding new revenue, new streams of growth. And so we think that's on the come, but it's early days. I kind of coined it, we're kind of in the dial-up era of AI. A lot of these technologies are still quite immature. The costs are still higher than customers would like to pay. And the performance and latency for some of the technology is also not great. And so as the costs come down and the performance increases, you're going to see customers really embrace and deploy AI applications at scale.
Is that the short way of saying it's just not worth it yet for most customers?
No, I wouldn't say that. There's a lot of experimentation and prototyping going on. Almost every company has to have some sort of AI strategy, whether it's to just drive more efficiency in the business.
But it's expensive, and it may not result in huge efficiencies just yet.
Yeah, and I think because the tech stack is early, it takes time for people to figure out how to drive value. There's some outliers who are being very aggressive in terms of driving more efficiency and, say, customer support. But it's going to take time for customers to really figure out the best way to deploy AI and where the biggest impact in the business could be.
Just like the name, David, it sounds like, the guy in the frat that takes a beer can and Mongo and it smashes it into his forehead, right? Can you hire people, Dave, right now? Yeah. I mean, who would you hire? What should I come out of? What should I come out of grad school with to get hired by Mongo?
Yeah, obviously, we like people who bring a lot of skills, whether it's on computer science and strong technical skills, problem-solving skills, who work hard. So we're hiring this year. We're investing in our business. We expect our headcount growth to be in the mid to high teens. We also, so we see a big opportunity in front of us. We also obviously, want people who are coachable, people who want to learn and grow with us. And so we tell people who join MongoDB, you're not coming for a job, you're coming to build a career. And I'm very proud to say people who started with us as individual contributors now are, vice presidents running big parts of our business. So we're quite excited about the opportunity in front of us.